The stocks bull market was driven to a series of new all-time highs during 2014, ending up for the 6th year in a row. So another year with the always imminent crash and bear market reverse gear courtesy of the euro crisis and the end of Fed QE that just never materialized, experiencing only a couple of road bumps along the route to a close of Dow 17,823. So in this video I will seek to determine the destination for the stocks bull market for 2015. This analysis and concluding detailed trend forecast are based on the following article published at the Market Oracle website on the 3rd of February 2015. 2014 proved to be another year where I reiterated my simple strategy of the greater the deviation from a stock market high, then the greater the buying opportunity presented. My last analysis of the year mapped out a trend for 4 months to the end of January 2015 that was revised in November for the Dow to trade above Dow 18K by late December before experiencing a significant correction during January 2015. Of late, the mainstream media has been obsessing over the aftermath of the Syriza victory in Greece as a trigger for Eurogeddon financial markets meltdown. However, as I have covered in detail over several weeks, is that the ECB would print an unlimited amounts of euros to prevent Greece contagion by ensuring Eurozone liquidity, though not for Greece, much of which would find its way into the world's stock markets. Where Greece is concerned, it's going to get much worse before it gets any better, because Greece will default on its debt. Its banking system will collapse, for there is already a bank run underway, and Greece will leave the Eurozone when it will be forced to print monopoly currency with a very high inflation rate, with probably Spain and Portugal to follow suit in a more orderly manner within 12 months, i.e. to also leave the Eurozone. Recent events have once more brought Islam and the clash of civilizations back into the headlines. However, I see this in terms of humanity's evolution from the age of religion to the age of reason, in which respect there is no clash of civilizations, rather that the Muslims are going through the painful process of evolving towards the age of reason. This has a huge potential for economic growth, as an accelerating outbreak of enlightenment across the Islamic world should act as a big boost to humanity, even greater than that which we have seen in China over the past 30 years, which presents huge multi-decade investment opportunities that I'm sure I will write about for many years to come. The oil price crash, whilst proving as a great boost for the finances of the ordinary people, however, is resulting in a collapse in the oil-dependent regional economies such as that of Scotland, where the S&P delusion of banking on billions in extra tax revenues following independence has already gone up in smoke, as much of North Sea oil is reliant on oil prices being north of $60 just to break even. Where the general stock market is concerned, as long as GDP is not collapsing, i.e. growing by at least 2% per annum, then a low oil price should be good for the global economy and general stock market indices, and especially sectors such as airlines and transportation companies. My long-standing US dollar trend forecast conclusion for 2015 is for the dollar to trend higher towards a target of 98 by midsummer 2015, probably terminating in a spike to just above 100 USD before correcting back towards 92 by the end of the year. The Dow USD chart clearly illustrates that A strong or weak US dollar does not automatically translate into any significant impact on the stock market. Therefore, the stock market can and has continued to rise with a strong US dollar, as well as not forgetting that a strong dollar means foreigners are buying dollar assets such as stocks and housing. The end of Fed QE was supposed to trigger an end to the bond bull market. Instead, it has had the exact opposite result, which reveals the truth of what is really going on. Therefore, I see the announcement for the end of QE as a red herring, as I don't think it will have either a bullish or bearish effect on the bull market's primary trend, as in my opinion, QE has not really ended. Just the Fed pressing the pause button for a few months or so. So yes, whilst this implies greater volatility in the stock market trend, as it is no longer being smoothed out as we have witnessed during January's wild gyration, but no, the 6-year stocks bull market has not come to an end, because QE has not really come to an end either. The Dow tends to find strong support at the 200-day moving average, which suggests that the Dow should be now gearing up for a trend to a new all-time high by late April before correcting. The Dow currently resolves to a bullish Elliott wave pattern, which implies that the Dow should now embark on a trend to a new all-time high, probably before the end of March 2015. My March 2013 stocks ebook concluded in the following Elliott wave megatrend pattern as a rough guide for how long and how far the stocks bull market could run, and implies Dow 16k for 2015, which is set against actual of 17,200. Of course, it is still a fantasy pattern because no one can put their money on one tool, let alone one chart. Still, when something works, then one has to pay attention to it. The current price action is toying with the break of channel 3, which would imply a trend to channel 4 or about Dow 16,500. That would then put the Dow in a trend pattern between channels 3 and 4 that implies at least Dow 19k before the end of 2015 and probably above 19,500 during December. The stocks bull market clearly remains intact as the Dow continues to put in a series of new highs and higher lows. The last major low is 15,855 and the last high is 18,103. The current price action implies a trading range for some time of between 18,103 and as low as 15,855, though I expect significant support around Dow 16,300. So the Dow could spend the first 6 months of 2015 going nowhere, i.e. in a negative based territory for much of this time period. And finally, briefly, the S&P on a P of 18, whilst not cheap, does not translate into an end of the bull market and the start of a bear market, for bull markets usually tend to peak at bubble extremes, which given 6 years of trend implies we are still several years away. So in terms of valuation, this bull market could actually run for several more years. Now, pulling everything together, I have 3 key questions to answer in determining a trend forecast for 2015. The first is, will the Dow close up for the 7th year or not? For which my conclusion is yes. This despite currently trading below the opening level of 17,823, and that the Dow could trade much lower, i.e. it could go as low as 16k. Secondly, by how much will the Dow close up on the year? After all, this is an aging, mature bull market, so it is very unlikely that we're going to see the gains of the likes of 2009 or 2013. Much of this analysis converging towards the Dow to be trading at a high of between 19,000 and 19,600 during December, a gain of between 6.6% and 10% on the year. The midway point being about 8.3% or 19,300. Therefore, I'm expecting the Dow to end the year between 19,000 and 19,300. And thirdly, trend. The first half looks likely to be volatile with a negative trading range. The second half of 2015 should see the Dow start to rally from a summer low into a mid-December high with a correction in October. Having reached the final destination of this analysis, my forecast conclusion is for the Dow to spend the first half of 2015 in a wide volatile trading range that will set the scene for a bull run to have started by early August that continues into the end of the year, punctuated by an October correction low. I further expect the Dow to be trading well above 19,000 during December and probably spike above 19,500 before closing at around Dow 19,150 for a 7.5% gain on the year. The bottom line is, don't be frightened by first half weakness. Yes, it may look grim if we see the Dow trading below 16,000, but all it would represent is a deeper buying opportunity before the market resolves to above Dow 19k. And ensure you are subscribed to this YouTube channel for ongoing analysis and detailed trend forecasts.